Ford really the object of envy for a lot of the car makers because it was able to avoid a bailout. The problem, however, for Ford has been its large amount of debt that it has used to avoid that bailout, and of course its investment credit rating, or the absence of an investment grade credit rating. That was something I was talking about with the CEO of Ford yesterday, Alan Mulally. It's something we're going to talk about now a little bit more with the CFO. Thank you very much, Mr. Booth, for joining us.
Hi, Ron.
Yesterday, Mr. Mulally said that Ford is ahead of schedule in repairing its balance sheet and restoring its investment grade credit rating. Ahead of what schedule? I don't know the schedule.
Well, no, it's not a schedule we would publish, but I think we're ahead of our expectations when we started this year. I think we've had a very strong recovery in our business performance. A pre-tax profit of $5 billion in the first half, net positive operating cash flow of $2.5 billion, paid down $7 billion of debt in the second quarter. So really made significant strides. But I think of it as making strides towards improving our balance sheet. The rating agencies will decide when, in their view, we get to investment grade. For us, we have to just focus on improving our balance sheet.
And that's about the debt, right? So you've got...
That's about the debt, yeah.
So you've got, what, $27 billion worth of debt now. You just said that you paid down $7 billion of the debt in the last quarter. All of this, the legacy, of course, of the $23 billion you borrowed in 2006, just before the credit markets froze. How much more debt can you pay down this year? How far do you think you need to go before you can get that investment grade credit rating back?
Well, we're not giving specific projections, but at the end of the second quarter we had $27.3 billion of debt, but our net debt position, so our debt less our cash, was at $5.4 billion of net debt. And we've said that by the end of next year we'll be into positive net cash, so that minus $5.4 billion will move to a positive number. So that's our projection for sometime during next year we'll get to a positive number.
One of the things you've been able to do, thanks to that debt, is keep the product pipeline going.
Yeah.
How far do you think you are ahead of your peers? So we heard Mr. Mulally earlier today talking about having the freshest showroom in 2 years' time. You're going to have the most number of new cars. GM, Chrysler, how far are they behind Ford?
I don't know how far in years, because obviously with their issues they've had a couple of years of constraints on capital expenditure. I think look at our show here. We've got more than half our model range is brand new or refreshed this year for the Ford of Europe team. And by third-party measures like the Car Wars report, for example, people say our product range is going to be either the freshest or amongst the very freshest in the foreseeable future.
A couple quick questions for you. The GM IPO, what's that going to do to your share price? We've heard Bill Ford talking about how some fund managers are going to sell Ford and buy GM.
Some fund managers may need to do that because of their objectives, but I think for us, the investors are going to judge our story, the progress we're making, and I think we're going to continue to make progress.
When do you think you can restore the dividend, or at least what do you need to see to restore that dividend?
We need to see substantial improvement in our balance sheet. We need to see continued business improvement, and that's some way off before we start talking about dividends.
All right, Louis Booth, thank you very much. That was the CFO of Ford joining us there, talking about repairing the balance sheet.